$500 billion worth of long positions are about to get liquidated if the XRP price drops to the $2 area.
XRP is pumping again, and everywhere you look, people are shouting, "This is the one, don't miss it." But here's the cold hard truth. Despite the uptrend, XRP is one of the riskiest places you could invest your money. Today, I'll break down exactly why you should think twice before touching it. On the surface, XRP looks like a dream. It's backed by Ripple Labs, it's fast, it's cheap to move, and it has massive name recognition. But beneath the headlines lies a storm of problems. Legal battles, centralization risks, questionable tokenomics, adoption hurdles, and controversial moves by its own leadership. This video isn't about fear-mongering, it's about showing you the facts so you don't get blindsided. Let's dive into the reasons XRP may not be the safe bet many believe it is. The never-ending legal battle. The years-long lawsuit between Ripple and the SEC has officially ended. As of August of 2025, both parties have dropped their appeals, closing the case and leaving Ripple on the hook for a $125 million fine and an injunction against institutional XRP sales. Sure, that's resolution, but legal scars don't heal overnight. That lingering restriction on institutional activity still dampens listings, partnerships, and confidence. And in crypto, reputation matters. XRP spends more on legacy litigation than innovation, and that kind of baggage can crush its long-term investing case. Centralization concerns. Crypto was built on decentralization with the idea that no single company controls the network. XRP breaks that rule. Ripple Labs owns a massive chunk of XRP supply, and they release it from escrow every month. That means one company effectively controls the majority of tokens, creating a supply overhang and raising questions about how trustless the system really is. If decentralization is the future, XRP looks like a step backwards. And when one company holds the keys, the risk isn't just theoretical, it's systemic because their decisions directly shape the market. Tokenomics that don't add up. Here's the problem with XRP's design. Owning XRP doesn't give you rights to Ripple's business success. Ripple can land bank partnerships all day long, but that doesn't mean XRP holders directly benefit. The company profits from selling its escrowed tokens, not necessarily from driving token value. That disconnect leaves investors holding a coin that may not track with the company's actual growth. Adoption isn't what it seems. XRP's biggest selling point has always been its use in cross-border payments. But let's look a little closer. Many banks that partnered with Ripple don't actually use XRP. They just test Ripple's software or payment rails. The flashy announcements make headlines, but real adoption of the token remains thin. Meanwhile, competing blockchains and stablecoins are winning actual usage in payments and remittances. Better alternatives exist. While XRP's tech is fast, it's not unique anymore. Other blockchains like Stellar, Algorand, and even newer Layer 2 solutions are faster, cheaper, and more decentralized. Stablecoins like USDC or USDT dominate real-world transfers, and Ethereum still rules DeFi. XRP's competitive advantage has shrunk dramatically, yet the hype hasn't caught up with that reality. Controversial leadership decisions. In 2022, Ripple's co-founder Chris Larsen donated $5 million to Greenpeace to fund the Change the Code campaign, an effort to pressure Bitcoin into altering its proof-of-work design. Many saw this as an attack on Bitcoin, the very foundation of crypto. For XRP investors, it raised a big red flag. If the leadership is willing to bankroll campaigns against other cryptocurrencies, what does that say about their priorities? Moves like this don't exactly inspire trust in Ripple's alignment with the broader crypto community. Quick XRP reality check for viewers to note. Legal uncertainty is far from over. Ripple controls the majority supply. Token holders gain nothing from Ripple's deals. Adoption news doesn't mean coin adoption. Stronger competitors are already ahead. Leadership decisions have sparked controversy. The psychology trap. One more thing, the biggest danger with XRP isn't technical, it's psychological. Because it's cheap compared to Bitcoin or Ethereum, new investors think if this goes to $10, I'll be rich. That's unit bias, where you focus on price per coin instead of market cap. The truth is, for XRP to hit numbers like $10 or $50, it would need a market cap larger than all of crypto today. That math just doesn't work. So to conclude, XRP has hype, historically in headlines, but it also has lawsuits, centralization, and broken tokenomics. Sure, it may pump in the short term, but long term, the risks outweigh the rewards. Don't confuse price action with fundamentals. If you're serious about building lasting wealth in crypto, focus on projects with clear adoption, strong communities, and token models that actually benefit holders. XRP might be a trader's coin, but as an investor, it's a gamble. This is how it starts. One smart move at a time. Hit the next video and keep building the life you deserve. Take care, my friend.